With you, were you surprised by some of the weakness that was so widespread around this market today?
I was a little surprised, Nadine, although we probably were expecting to see a little bit of this last-minute sell-off, particularly from some of those fund managers which may be looking to sort of reposition ahead of the end of the financial year. So we certainly saw that across all sectors today. All sectors did close certainly in the red, and of course we did see those new home sales coming through for May, which were pretty disappointing, but the market really didn't seem to react to that, and it just kept trading sideways and continued lower for most of the day. Of course, some of the worst performers was that property sector, as well as materials, where we did see those lower commodity prices coming through overnight. We also saw industrials, healthcare, and as well that consumer discretionary area was also lower. One of the interesting ones in that discretionary area was in fact 10 was up around 4% today, and if we have a look at the performance last week, they were up about 4%, and that's around continued speculation that people take over interest in this stock. So that was one of interest today, but overall a pretty disappointing day. But for the financial year, we did close up around 12.35%, so that was nice to see.
M&A and corporate activity on the market today. We're hearing from Henderson Group announcing an acquisition of Geneva Capital Management. Tell us about that one.
Sure, Nadine. It was pretty positive for Henderson today. They did in fact close up around 1.4%, and really we are continuing to see a lot of this M&A activity across our market. They have in fact announced the acquisition of Geneva Capital Management, and really I think the market was focusing on a lot of the positive announcements out of this. So that is going to look to strengthen their North American business. Post the acquisition, their North American business will have assets under management of about $18.3 billion, and that represents about 15% of the group, and of course it is also expected to be earnings per share accretive in the first year post the acquisition. So it certainly did look like good news, and I think that the market was certainly focused on that, and we really are continuing to see a lot of M&A activity across all sectors of our market. Last week we did as well, so I really think that's providing a bit of a boost to consumer sentiment as well.
Still have Qantas blaming consumer and business sentiment for disappointing May traffic statistics. But really, you know, nothing much changing for Qantas. So what's your view on the stock? Did anything today change that?
That's exactly right. No, Nadine, we do still remain pretty cautious on the outlook for this stock, and of course we did see this negative data coming through, as you mentioned, as a result of that weaker consumer sentiment. But looking at the outlook on the stock, we know that Qantas is continuing to face a lot of competitive challenges. Its cost base really is looking to be quite high at the moment. So, and of course we are continuing to see consumers really searching elsewhere for value across Virgin and Jetstar as well. So we are continuing to see Qantas coming under pressure. We do know that they are continuing that $2 billion cost reduction program and that strategic review that they do have in place. And whilst that is going to reduce the losses in the short term, we don't expect that the company is going to return to profitability until around financial year 16 or so. And in terms of paying dividends, we don't expect them to return to this until the year after, so say around financial year 17. So really the outlook on the stock does remain pretty cautious in our view, and of course today's negative data really confirms this. I think it is a bit of an issue, but I certainly think it does look pretty positive. They have indicated today that it's going to look to be priced at around a 10.8 to 12.1 times forecast earnings before interest and taxation, depreciation and amortisation, and that's in comparison to the healthcare sector average of around 14 to 21 times. So if we have a look at that, potentially could look fairly attractive, but I do suspect there will certainly be a lot of interest in this one. It is going to be the largest equity raising this year. And of course, if we have a look at some of the other IPOs in the healthcare sector, there have been pretty strong performers. Last week we saw Monash IVF coming on board, or coming online. It was up around 3% on the first day of trade. If we look at Virtus Health, that in fact is up around 32% to date, and Japara Healthcare up around 18% to date. So really, if we have a look at some of the performance of the previous IPOs, potentially could be a strong performer as well for Healthscope.
Okay. On your agenda, give us a preview of what we potentially could expect coming from that Chinese manufacturing PMI.
The Chinese manufacturing PMI certainly will be an interesting one. Of course, we know that this slowing demand out of China really has been the focus across our market. So we'll be hoping that we will see a more positive read for this one, and obviously that will potentially have an impact on a lot of those iron ore and copper players as well. But certainly tomorrow will be the focus on that RBA rate decision, where we are expecting rates to remain on hold at 2.5%. Of course, on Thursday we have those retail sales numbers and building approvals due through as well, and of course that US data that Michael mentioned as well, which potentially will be market driver for Friday. So a lot to look out for.